A new report from NBC shows signs of relief for the housing market. According to that report, home supply is increasing, demand is settling. However, they do warn that tariffs and a prolonged trade war could cause prices to stay higher for longer. The materials are more expensive, basically. Real estate broker Lisa Lippman joins us this morning. Lisa, do you see tariffs having a drastic impact on the housing market? Could that be a real fly in the ointment?
So, the market that I know is New York City. That's the market that I know the best. And what I would say is this: tariffs will have a negative effect in general. They have to, right? If things become more expensive, people feel poorer. They don't feel as good about spending money. However, in New York City, we have such a depth of wealth that we have not seen the stock market dropping, the fear of tariffs, the potential looming recession affecting the high-end market. Where we will see the tariffs really affect our market is on homes that need a renovation. And I should say that, homes that need renovations have always sold at a discount. But until 2020, until COVID, people used to really like to buy something that needed a renovation if they got a good deal on it. And that was very appealing, and people felt that that was a win-win. After COVID, when the supply chain became so difficult, the cost of doing renovation in New York nearly doubled, and it has not gone back. And so the equation for buying homes that need work has completely changed. People are really afraid of doing it. It's so much more expensive. Of course, we haven't had a supply chain issue in a while, but with tariffs, we may have a supply chain issue again, and the cost could go even further up. And as you know, when we have an insecure economy, people don't like the unknown. So they are going to want to purchase something that's done, that they can move into, and they're not going to want to purchase something that they have to do work on that has a lot of unknowns and they have to wait for.
Yeah, makes sense. Lisa, a new report from Realtor.com shows that homes have been staying on the market for an average of 3 days longer. That doesn't seem like a whole lot than they did the same time last year. But it also shows that new listings are up more than 8%. I know one of the problems has been that people don't want to give up that ultra-low 30-year mortgage rate they got, 2.8% or 3%. Is that still the case?
That is still the case, and in the last few years, one of the reasons why our market wasn't great was because the interest rates were higher. People were not willing to sell out of the home they had with a lower interest rate to buy into a new one. Having said that, we have seen an uptick in the New York City market, especially over $10 million, but in all markets since December, and that has a lot to do with the fact that there's a lot of cash in New York. So a lot of people don't finance, believe it or not. And that's actually true at every price point. That is because of the transfer of wealth from one generation to another. We're seeing a huge transfer of wealth from the generation of people sort of my age and older.
We're running out of time. I'm so sorry. But you mentioned 10 million. That's Stuart Varney territory. I'll just say that. But Lisa, thank you so much for talking to us. And New York is a whole separate animal. I get that, to the rest of the country.